Bismillahirrahmanirrahim. Distinguished guests, Speaker Dr. Salman Ahmed, CFA Society Pakistan Board of Directors, and our members. Assalamu alaikum and a very warm welcome to all of you. It is my pleasure to welcome you to this insightful discussion on the economic performance of emerging markets and Pakistan's outlook for 2023 and onwards. We are honored to have Dr. Salman Ahmed, who is the Global Head of Macro and Strategic Asset Allocation at Fidelity International, as our keynote speaker. I would first like to invite Ms. Ruxana Narejo, CFA, who is the Director and Inclusion and Diversity Chair at CFA Society Pakistan, and the moderator for the evening, for her welcome address. She is the Head of Treasury Division and Financial Institutions at Sindh Bank Limited, and has a versatile experience of working with organizations such as the Asian Development Bank, National Fullerton Asset Management Company, Standard Chartered Bank, BMA Asset Management Company, and Crescent Capital Management. She also serves on the board of Sindh Mudaraba Limited and Sindh Microfinance Limited. So without further ado, please give a round of applause to Ms. Ruxana Narejo.
Dr. Salman Ahmed, ladies and gentlemen, good evening. I hope you are having a good time. I think it was a busy day and the last day of the week, so thank you so much for being here. Um, I'll just say a few lines before we invite Dr. Salman to come on the stage and share his insight because we want to utilize and optimize on his time. Why we kept this event was that while remaining in Pakistan, we are all the portfolio managers, research analysts, and everything, and we have been bombarded with all the negative news so far. We do not see any positive news or light because IMF program and its signing is getting delayed every day. Today, we want to look at the future of Pakistan with IMF, without IMF, restructuring or default. Also, in current circumstances, looking at the inflation, looking at the energy outlook, how Pakistan's future look, and how the international investors are looking at Pakistan. Because I must say that right now we are going through a very bleak period of our history where inflation is at historical high and interest rates are, I would say, historical high because जब हम डिस्काउंट रेट की बात करते हैं तो अक्टूबर 1996 में डिस्काउंट रेट 20% था. अगर हम अपने डेटा की गैदरिंग को देखें अगर 68 ईयर्स हमारा डेटा कलेक्शन का एक टाइम फ्रेम है तो उसमें राइट नाउ वी आर ऑन 21%. सो मे बी वी कैन से that inflation and interest rates are at their highest and there's no end in the sight because next few months bring more challenges to Pakistan's economy जहाँ पे inflation भी बढ़ेगा and as per Kamran Khan interest rate भी बढ़ेंगे. I'm not saying anything that interest rate बढ़ेंगे but he's saying that interest rate बढ़ेंगे. So I'm not going to take much time. I'll ask Isra to come on the stage and invite Dr. Saab to share his view on Pakistan. Thank you.
Before Dr. Salman comes up on stage, let me just give a brief introduction. He's our speaker for the evening and he's an accomplished individual. He joined Fidelity as the Global Head of Macro and Strategic Asset Allocation, as we already know. And previously, he was the co-chair of Global Investment Committee and Chief Investment Strategist at Lombard Odier IM. He has worked with EDF Trading as the Head of Global Macro and with Goldman Sachs International as well, as the Global Economist within the Global Macro team. He holds a PhD and an MPhil in Economics and Finance from the University of Cambridge, and he obtained his undergraduate degree from Lahore University of Management Sciences in Pakistan. So please give him a big round of applause.
No, thank you very much. It's a pleasure to be here, and thank you for your hospitality, Ruxana. Thank you very much for the very kind and generous introduction. So I'm gonna start with less negative news because I think by now you are, as Ruxana mentioned, being bombarded by negative, you know, outlook and comments on a daily basis. But the reality is the situation is bad. So you can't put a spin on things. Uh, so let me start by taking a bit of a longer term perspective on things, because I think let, let's put things in perspective. So since the COVID shock passed through and the reopening started, and my travel restarted over the last 6 months, so I was at home for as like everybody else at for 2.5 years, and travel restarted. So I managed to go back to the countries I was visiting. So my own background is very much emerging markets. When I was at Goldman's, I was one of the authors of the report which worked on BRICS: Brazil, Russia, India, China, and Next 11. And I had the opportunity to come into Pakistan in 2007, talking about BRICS and Next 11 under the Musharraf government. Obviously a lot of time has passed. But let's start with a longer term perspective, and where we started from and where we are at the moment, and what lies ahead, and and what are the choices. Um, so in 1980, Pakistan's per capita income was higher than India and Bangladesh. Uh, since then, uh, especially since the 90s, you see a big divergence happening. So India's growth rate moved from what was often called the Hindu growth rate of 3.5% to now around 7 and 8. You saw a big jump in Bangladesh growth rates as well. I'm taking these countries as a reference point because you have some common history, starting points. So it's an interesting way to do a at least a like for like comparison. So now as we stand, our per capita income is, I think, 15 to 20% lower than India. Bangladesh is also overtaking us. But let's think about the projections next 50 years. So in BRICS, when we wrote the BRICS report, we were projecting on the basis of Cobb Douglas production models and some technological assumptions, population growth, productivity assumptions, and projecting per capita income for different countries. We did it for Pakistan, we did it for India, we did it for Bangladesh, we did it for the BRICS countries: Brazil, Russia, India, and China. But let's do it for Pakistan as we stand right now. So if the last 30 years of experience are repeated, the per capita income of Pakistan would be around $16,000. India would be at $45,000. Bangladesh would be around $38,000. You will look completely different to them. So they would be what would be classified as currently high middle income countries, and you would be classified as still a very low income country. So compounding matters. We can talk about 6 months, 1 year, all we want. But the law of compounding, if it's in your favor, is massive. And that's what we talk to people when we tell them, why do you have to save? Is to get exposed to the law of compounding. So our projections right now, if our current experiences are continue, and something happened in the 90s, and I would love to hear your thinking about it, and multiple factors can be in place, whether it's our governance structure, whether it's our geostrategic position, that's whether it's our corruption, or whatever you want to call it, although India and Bangladesh are as corrupt, and probably more so in some areas. But we do need to widen and extend our horizons and start thinking about in decades, and start thinking about the power of compounding. Again, I don't want to frame it as a negative thing, but this is our trajectory right now. So our generations, I've already worked for 22, 3 years. We have some colleagues who started at the start of the century. We'll probably be done and retired by 2050, and who knows what happens given all the variable factors in place. But we are going in a world where we are gonna basically leave a country which is significantly weaker and poorer compared to our neighbors who started behind us. Now that should be a big moment of reflection for Pakistan, both the public sector and the private sector, in terms of where did things go wrong. We've gone to the IMF for 21 times. We were a perpetual customer. Why is it that other countries react to IMF programs the way they do? So in 1993, India had a balance of payment crisis. Manmohan Singh was the finance minister. And they instituted some significant reforms after that balance of payment crisis. So we have to ask ourselves why. So I'm going to raise some questions. Why we have to ask ourselves, why is Pakistan different that we don't get that reset, which a pain like a balance of payment crisis can create? So I understand we are in the run of the business. I am not on the ground, so I may have the luxury of thinking about these things without being exposed to the short term. But ultimately, countries and the investors or the stakeholders we engage with who are thinking about these things do think in decades. So when I'm speaking to pension funds, insurance companies, I was in Mexico last week speaking to some of their biggest banks, pension funds, and they are becoming a big beneficiary of the geopolitical environment. There's a lot of near-shoring, reshoring happening. So I heard that US manufacturers are moving production back to Mexico big time. So there's a lot of things in flux. But I do want to pose this question: are we thinking about the right horizons? And are we still getting sucked into these cycles without a proper plan that this kind of situation shouldn't happen again? So that's first question. Second is, how do we compare ourselves to our emerging markets right now and the environment which we are facing? So cyclically, the environment is quite tough. Fed has instituted a very significant tightening policy. Inflation has been quite high. Interestingly, the countries, especially the major EM countries, did learn their lesson and they started tightening in 21. So countries who were tightening in 21 are actually in a better shape to withstand this this increase in dollar funding cost. It's a significant one. It's the second largest tightening which is happening since the 1970s. So it's a major reset in the cost of capital. So any country right now which is perceived and potentially anchored in reality to be making political mistakes and policy mistakes are being punished by investors. And the story is very simple, as you would learn from your CFA modules, is the discount rate factor. When the discount rate factor goes up, you have to beat a higher benchmark. So the benchmark return you have to beat now is 5% plus in treasuries. It used to be 0 until a few years ago. So from a Pakistan perspective, it was the worst time to have a crisis, because the global environment was very, very problematic, and became even more problematic after the war, where you had a commodity shock as a result of course, Russia and Ukraine. And there are significant changes happening there. Europe's energy security is under pressure. They have to rebuild their entire energy infrastructure. They have to rebuild their defense infrastructure because of the perceived issues coming from the war. So a lot of things which could have taken decades are happening over months. And there's a fundamental change in policy making, understanding of energy security, interlinkages between countries, which is happening right now. Now, how does that relate to Pakistan, and what are the positives and negatives? The positive is that everything is in flux. So if there is a long-term strategy and you can connect to that strategy and articulate it and institute those reforms, there is, fruit on the table. The negative side is that geopolitics is once again in a different way quite important. And what choices we make are right now are going to be very important for not only the next 1 year but also the next 5 to 10 years. The last time this kind of environment change happened was after World War II, when obviously the West won against Germany, Nazi Germany, Japan. They created those institutions, IMF, after the Bretton Woods being the instrument through which those institutions engage with developing countries, of course. Similar, but not to the same extent, of course. So I think that World War II was much more intense and a more existential threat for the developed world. But there are some similarities in terms of rebuilding of that infrastructure or at least the orientation of that infrastructure. So pulling back and making it relevant for Pakistan, and I don't want to sound negative here, because negative means that you are assessing that things are going to get worse. What I'm trying to share is the diagnosis. So we have never been able to create that kind of horizon which we need to make sure that these kind of severe cycles do not occur. And this is not just because of politics, because we have been to the IMF so many times, so there is this recurring issue. So as from an investor perspective, at least from a foreign investor perspective, the reality is that Pakistan is not top of the mind by any stretch of the imagination, but also the exposure is very, very low. So you can see it from your external debt profile. Only 8% of the debt is private sector held. For a typical EM, that tends to be around 30 to 50. So even historically, because of these recurring issues, foreign private sector has not engaged structurally in Pakistan, which is a blessing right now, because things would have been much worse if the private sector was involved right now, because you could classify it as hot money, right? They would have left first, asked questions later. But because there is official sector, there are of course other dimensions to it, and I'm sure the conditionality which is being put in, which is by the way the most severe conditionality of any plan Pakistan has engaged with from the IMF, very similar to what IMF did with Argentina a few years ago, which is basically increase of cost base across the whole swath of the economy. So we have to start thinking about, is this a viable strategy? Not only when we get out of this crisis, but is this a viable strategy that Pakistan can go back to IMF again and again with this kind of conditionality being attached? So there are quite interesting and painful, obviously, lessons to be learned, but this kind of engagement is different this time around, and potentially related to the changed geopolitical context in which Pakistan finds itself, because the last few IMF programs happened when there was a live Afghan war happening on your borders. So that angle and factor is important to consider. So how are we thinking about within the context of EM, and then thinking about, okay, what are the scenarios to pan out for Pakistan? So EMs more or less right now are all vulnerable, although as I mentioned, there's differentiation going on in terms of countries who hiked first, who managed their current accounts, and more importantly, who learned their lessons from the 1997 Asian crisis, in India's case from the 1993 balance of payment crisis, who have been targeting very high level of reserves. So some of these countries have made reserves their core and fundamental target, equivalent to having, a military strength, if you will, because this is the economic bulwark you have against cycles, and this doesn't happen overnight. It happens over time. It happens with strategy. It happens with focus. So so those countries are less exposed to these cycles, and the countries you find in the news where they are being exposed are the ones who are have not made any provision for or buffers for this kind of shocks. I'm not saying Pakistan is the only one, but it's the one in that group of countries who are also very much have been recently dependent on geopolitical environment. So how do we see things going forward? One thing is different this time around is that previously the IMF programs came in. The rule of thumb was that the cycle will move very quickly, funding will come in, sizes tend to be smaller, and there was the moral hazard reason to effectively to push things forward. This time around, as I mentioned, geopolitical factor is live, so you are thinking about how do we chart out a trajectory out of it. So that's why, of course, the default question comes in, whether there'll be restructuring. On that, as an economist, I think the default question is, frankly speaking, irrelevant, because Pakistan is defaulting through inflation. So the difference between your inflation and interest rate is the default. Super taxes are default mechanisms. So those are already happening, but it's happening over a period of time, and it's happening through nominal money illusion. So you say, oh, I'm making record profits, but in dollar terms you're down. In real terms, your purchasing power is being deteriorated. Unfortunately, Pakistan, I guess depends on how you want to frame it. Fortunately or unfortunately, Pakistan is one of those countries who hasn't experienced hyperinflation. But if you look at LATAM countries, Turkey, they know how hyperinflation works and how default happens. So this is tip of that, whereby you're seeing inflation-driven default on the holders of local currency. And I don't see that changing unless and the numbers become more sustainable. Although the problem with that is it drags on by its nature, because if they go for it quickly, then you can create a liquidity-induced solvency crisis. So that's the reason why you need inflation to run course and let that default happens. When it comes to the external side of things, the question would be this conditionality, of course, the official sector and what they are saying, how the other countries interact, and then, as I said, I think the factor to watch would be geopolitics, and if you have a view on that, that's how it would be construed and thought through. Next year, just a little bit on global macro environment. We are one of the more defensive and bearish houses. We have been calling for a recession in the US for some time now. We think that this kind of tightening will create damage, and if it is not done properly, then you have a risk of a balance sheet issue appearing next year as corporate refinancings come through. Inflation is a problem in the developed world as well, and you're seeing reactions coming through from the key central banks, and they are here to stay unless until something blows up. And we have seen this since yesterday, this bank's Silicon Valley Bank news showing that how tightening can break things. So from a global perspective, things are not going to improve anytime soon. The only relief you may get is that oil prices may come down because of recession fears, which may improve some of the terms of trade issues which may arise. Although still, if there's a dollar shortage, it doesn't really matter if the oil is at 80 or 60. So you have to take that into context as well. But that's the only stabilization mechanism I see for EMs, that oil may get cheaper. That said, China reopening is coming out in very fast. They were not consuming a lot of oil last year. There was a deficit. There was a shortfall of 1 million barrels a day in China demand because of the COVID lockdown, and now it's coming back. So you have to balance that. That you may have China demand, which may not give that relief because it starts sucking in energy out of the system. So there are some balancing forces in place on that front. So it's a complicated outlook, um, and we have been in the case of hard landing for some time now, and as I mentioned, risk of a balance sheet recession. What can create a soft landing? Until a week ago, everybody was talking about soft landing in the U.S. Uh, and saying, okay, maybe we go through this cycle without a recession because of COVID surpluses. A lot of fiscal was done, and money was given to the consumers and the household sector, and that may mean that the consumer resilience may be stronger, and then you can get away with having a big recession. So we are not in that camp. Firstly, because we think that will only cause the Fed and make the Fed keep policies tighter for longer, and then ultimately make that damage come through. So there's a chicken and egg problem with that kind of argument. Although one thing may help is that you supply side factors continue to resolve inflation, and then the Fed may think that, okay, if inflation is coming down without a recession, then I can start cutting rates. So you do need a cutting cycle which is benign for soft landing to come through. If the cutting cycle happens because something has broken, then that means that capital will be sucked out of everything which is perceived as risky. So for investors' perspective, the bad news is nobody's looking at Pakistan right now, even though the risk premiums are rising. So unless and until there is some resolution and clarity, and then the risk-free rate in the US becoming clearer, that's when the risk premiums will reassert themselves. But for strategic long-term FDI investment, a structural quantum change in policies and outlook will be needed. Another thing which is coming through now, which was not the case in the last few years, is that everybody is becoming very careful about capital outflows and inflows. So the scrutiny on inflows is increasing. So it's not that easy now to, it's not as frictionless as it used to be pre-war. After the war especially, a lot of scrutiny is coming in on capital flows from different countries, and that trend is likely to continue, especially if China and US decoupling accelerates, which is likely to be the case. So it's a complicated world moving away from globalization. It's a world which is undergoing an energy shock. So there's negative news, unfortunately, everywhere, but to a different intensity. But there are winners and losers. And the winners in this environment are those countries who can make a case for nearshoring, reshoring, like Mexico, Vietnam in Asia. India is a beneficiary of that. You may have heard Apple moving their production to India. So geopolitical diversification is creating winners and losers, and ultimately the country's own policy setup, their articulation, their private sector sophistication will determine if you can become a winner or a loser in this environment. So it creates opportunities. Of course, the question is, how do you come through the challenges which you're facing currently? So I'll just end by few remarks on China, as I mentioned, very fast and effective reopening which happened. They have been very pragmatic about it. But views on China are now starting to diverge and become dependent on geographies. So you speak to Asian investors, they have a different view on China compared to when you speak to European investors or US investors. ESG is becoming quite important, and that's something I think will start to play out both ways. Um, I guess that was my second last point. The last point I would mention is climate change. We're doing a lot of work on climate change. Uh, the work is moving away from saying, oh, climate change is important, to actually linking finance and investment with science-based targets and science-based methodologies for climate change. We are hiring climate scientists as a finance company. We are engaging with all the major scientific institutions, trying to learn their language, understand their modeling, their assumptions, linking it up with questions which matter for us. My team has already published quite a few papers on that topic. There's one more coming in the next few days, where we integrate climate change scenarios into asset allocation frameworks. I would just highlight a few things here, and unfortunately this news is not good for Pakistan, and it's not only Pakistan but quite a few countries. So under RCP 8.5 scenario, which is basically the scenario in which carbon emissions do not come down, and you get climate change and temperature pathways increasing minimum 3C by 2050, Pakistan faces 90% reduction in their GDP by 2100. This modeling is based on impact on water table availability, arable land availability, and the impact on productivity. And these modelings are not taking into account intense weather events. It's not just Pakistan. India is similar, 95% collapse. Bangladesh is around 92. China is around 50. US is around 40 versus baselines. And these modeling results started coming out in 2015. There's a lot of work which has gone through to stress test them. The bad news is that the intensity of climate change events, including the floods in Pakistan, actually show that this modeling is conservative, because they were expecting that these kind of intensity events will be happening 10 years from now. So the current intensity of heat waves in UK, heat waves in Australia, snowfall in California, flooding in California, flooding in UK is happening faster than the projections I shared with you. Now, the question for us is, as investors, we get asked by long-term investors, by pension and insurance companies, to give these mappings, integrate this methodology into the asset allocation framework. So the countries who are taking this very seriously are instituting massive, wide-ranging and critical reforms in this area are China, Europe, and to a lesser extent US. So China has been working on solar technologies for some time now. I've been going to China since 2008, at least 3 or 4 times a year. Obviously, with the pandemic, I haven't been able to visit, but I'm visiting again by the end of the month. And they have been at the state level taking this very, very seriously and shooting and making sure that they have the technologies available to mitigate and adapt to climate change. because they believe in this modeling, and this modeling basically corroborates with the work they are doing. So it will be, and from a European perspective, where the legal infrastructure and the legal frameworks are being developed, it's also becoming important for them to understand the second order, third order impact of these massive climate change implications. And for Europe, the implication is migration. So if a country like Pakistan or Bangladesh or India collapses, their risk is that they will get migration flows in hundreds of millions. So that's the modeling they are doing. So we may have to raise our game to understand, firstly, the risks we are exposed to, which, by the way, others have already accepted and are working on it. B, think about the capital we need and the technologies we are going to need to adapt and mitigate those risks. And that could be the way to reintegrate with the world economy, because ultimately major population centers, I'm not going to single out Pakistan here, but in this region, and there are other countries in LATAM who are equally, if not more, exposed, would need to make sure that there are no major spillover effects, because climate change based migration has happened before in the history of humanity. So that's something we are very focused on. We are publishing papers. I've done 500 meetings over the last year on this with every major investor in the world. There's a huge amount of interest in this area, and the focus is to be science-based. Take away the fear factor and hyperbole. Give us the modeling. What are the assumptions of these models? Understand the models, the climate, starting from climate change modeling. How does the mechanics works? What are the damage functions you build from it? Then how do you fit it and connect it with the investment machinery, if you will? So a lot of work happening there. I'm actually going before China. I go to Australia. I'm speaking at a conference there. The topic is this: speaking to those pension funds, and there's a huge amount of focus right now in this area. So I know after the floods, unfortunate floods in Pakistan, this focus came through. But my message would be to take a step back and think about and link up with these major institutions who are working on it, and develop a plan which is not only focused on the next 5 minutes and for the next $5. This needs proper long-term thinking, and as private sector, I urge you to invest more and more time on it, because it's serious. At least what we find from climate change studies. I'm not an expert on climate change from a scientific basis, but when we engage with credible authorities and the modeling they are doing, it is very, very serious, and it can create that pathway to bring capital back to the country, because Pakistan is not the source or the driver of climate change. Our emissions per capita emissions are nowhere near developed countries. So this is actually a problem created by developed countries, because they are through industrial revolution and industrialization, they are the main ones who created these carbon emissions to get to the per capita income level, which they are. And I know at COP26 this was a major contention point between developed markets and EMs. But it needs the private sector to, I think, develop its understanding of the issue, how it's relevant to the problem set, which is in this case Pakistan. We are doing it for our global investors, and we are spending a lot of time and energy on it. As I mentioned, we are hiring specialist expertise. We are devoting a lot of resources to understand the problem, and we have taken the behavioral aspects out of it. This is not about fear, and this is not about negative news. This is about what science is telling us, and bringing that forward. So with that, I'm gonna wrap up my comments, and if you have any questions, any thoughts, or I'll welcome you back to the dice.
We'll proceed with the moderated Q&A session now. So, sir, I would like to request you to come back on stage and for Ms. Ruxana to join us on stage. And once we end with the moderated Q&A session, we'll open the floor to questions from the audience as well.
Thank you for sharing your view. While we were blinded by our current outlook, you have told us about the future outlook, which is equally bad. But then there are a number of questions. Obviously, we can only look at our future once we save our house from burning and being flooded. That is the most important question right now. So I'll again start my first question from where you ended, the floods. Pakistan just 0.5% contribute of the carbon emission. However, we were devastated by the current floods, and it's not going to end. That is what we hear from the UN. We hear from every other agency out there, and the impact is going to be huge. Though our GDP might be reduced by 90% in 2100, but the outlook on 2050 is also not good. I think we'll be under 75% water, and the situation is going to be really bad. What do you think we can do when we are not the carbon contributor, and the pressure is coming from the developed countries who are not ready to do much? What role can Pakistan play?
I think very critical question you ask, because it goes back to that future I outlined. That future is not a given, and it is our choice. And the choices we will make, to your point today, will determine that whether we even get to 16,000 versus $45,000 in India or not, or even lower. So, and we bring it back today, and climate change, and we saw the floods, as you mentioned, the most visible and vivid example of what can happen if this trend continues. Now, what can Pakistan do? I think the first thing would be Pakistan has to build its credibility that it understands this problem. It's good that we are linking up to the agencies and what their projections are, but I think we'll have to own this problem ourselves. Pakistan needs to develop its expertise in climate science, which takes into account Pakistan's Pakistan's parameters and facts. So you can firstly credibly show to the world that this is a very serious issue. And I'll give you an example of countries who are doing it. So Europe, on most climate change projections, is not the most vulnerable part of the world. In fact, Russia, on current climate change projections, is a beneficiary. So is Finland, so is France, because of their geographies. But all the major work on climate change is coming from Europe. They have set up regulatory frameworks which are quite advanced. They have set up detailed taxonomy for the financial sector. So we have to report our scope 1, 2, 3 emissions in our portfolios. We have to show a pathway, how we are going to divest or change the carbon profiles of our portfolio. Just to give you an example, we as a company run climate ratings on more than 4,000 companies, which are very detailed. Why is that necessary? Because Pakistan saying, oh, I'm exposed to climate change and have no infrastructure and architecture behind it is not credible, firstly. It needs devoted resources from the private sector and the public sector to create that architecture that we firstly can articulate, conceptualize the problem, and B, that will then open up the pathway towards capital and technological transfer, which will be needed to mitigate and adapt this risk. However, we have to keep in mind that the world has engaged with Pakistan on several occasions, and there is a mindset out there, and there's a rightly or wrongly a view of how Pakistan operates. I'm not, you know, I'm not saying it's the right view or the wrong view, but there's a very set and concrete view on how Pakistan is perceived to operate. The risk is that this is seen as a backdoor way to get capital without the impact it will need to generate. So that means the evidence we'll have to show that what will we do with capital to mitigate and adapt climate change is going to be much higher than the past. And secondly, as corporates and as investors, we are under a pressure to show that this is not greenwashing, and we actually will generate impact and emissions will come down. So I think the similar level of test or means test, if you will apply. And for that, there is now no shortcuts. You have to build that in architecture, infrastructure to understand this climate change issue, how it impacts Pakistan, what are the solutions, and then lead with solutions ourselves so that we can say, oh, we are taking the lead in trying to mitigate the impact of climate change because it is in our interest. Even though, as to your point, we are not the major emitter or have been the major emitter historically. And that's why we need the capital, which will be deployed cleanly and transparently. That's why we need the technologies, which will be necessary to mitigate climate change. So this kind of, I think, straight, transparent and resilient framework-based approach would be needed. I don't think in this environment and given the context, just saying that we are exposed to climate change will earn any sympathy, if you will.
My next question would be about energy. You mentioned that there's a possibility that under the recession and under highest interest rate scenario, the commodity prices, oil prices may fall down to $60. However, uh, there are three maybe contradicting factors to that. One is the war in Ukraine. Second, China coming back to full activity. Third is investment into the oil fields. Under all these three scenarios, what is your outlook actually? Because there are some houses which are predicting that oil prices by next year, somewhere after falling maybe 60, 70 for only few months, can go back to above $150. Do you support that view? And how it's going to play out for the countries dependent on to the oils?
So our own forecast of oil, this has been that it will range between $70 and $100 because of these pull and push forces. So recession risk in the US and developed markets is a downward force. Issues within OPEC are also a downward force. You may have heard about UAE getting out of OPEC potentially. And then to your point, China reopening is the upside risk. Now when it comes to structural spike risk due to capex shortfalls, I think it's a viable risk, hard to time, but if we have a significant supply-demand mismatch, then spike risks will happen. And in fact, they are seen necessary to push the system towards green technology. So importer countries, EM countries, need to be exposed to this injection so that you can change your infrastructure. Price-based mechanisms are very powerful in forcing people to switch. So you may see, I was going through the from Lahore, Islamabad. I saw a lot of solars this time around on the agricultural fields. That's because it's happening because of oil prices going up and energy prices going up. So this kind of shocks are needed to, if you want an economic solution to it, these kind of oil prices have to go up to kill itself, to push the system away. So to your point, this kind of capex shortfall, which by the way is going to remain in place because regulations are making it tougher for investors to invest in fossil fuels, we get penalized. Our investors are penalizing us. The central banks are asking about scope 1, 2, 3. So all those things basically end up by saying that, and some of these big banks, I think HSBC, if I remember correctly, said that they will stop doing new fossil investments. So this kind of spike risk does go up, but I think we have to think about it, not that it will, what will do in 2-3 months. We have to think about these spikes are going to happen. What is the energy security implication? And how are we going to change our mix? And that connects with climate change. And that means we have to stop thinking in terms of oil as a cyclical commodity, but as a, key input which needs to be weaned off the system. And that goes back to the climate change infrastructure and architecture, because that's the implication. You have to get out of fossil. Now you can do that preemptively, or you can wait for oil to go to 150 and do it once the house is on fire.
So, we're talking about commodity. You talked about focus on alternate energies.
Gee.
However, when we looked at current crisis during the war in Ukraine, we lost that focus. We were totally onto the gas, we were totally onto the oil, and the countries were panicking. If they had to give up their focus on alternative energies because they were talking about survival. In all this talk about survivability and emergency, do you think alternate energy would lose focus? Or do you think that is the future on which our survivability depends on?
I think alternative renewables are the future. The question is, when are you going to get it and how are you going to get it? Because the new taxation regimes which are being articulated in Europe, you can look into it, it's called border adjustment tax. So basically, if you are exporting to them based on fossil fuel, they will put a duty on it. So even if you bought oil at 80, they will treat it that as if you bought it at 200. They'll put a carbon tax on you. And the technology and the state of technology, sensors which are available, they can do input decoupling to the last particle of where it came from. So US has technology, for example, to find out which field the cotton was grown on. They have that kind of technology through genetic coding, just to give you an example. So that border adjustment tax means that, for example, Pakistan will not be in the next few years be able to export to Europe without being exposed to a heavy carbon tax if we don't move away from fossil. So those countries will punish you which want alternative and renewable and want to progress that. Europe is at the forefront of it. That border adjustment tax they're talking about vis-a-vis everybody, not just Pakistan obviously, but it's an active area they are focusing on. In the US, they have subsidized the renewable in a big time in the Inflation Reduction Act. They think this is not only a survival issue, but it's actually necessary if you are going to remain a superpower, because the future of energy is renewable. So from a Pakistan perspective, our survival will depend on it, literally, and commercially as well, because other countries will tax us. China is also opening up carbon pricing mechanisms, and of course they are big on renewables anyways. So that technology, they are the most important player in solar technology. The question would be, if we realize that we get away from 6 months, which goes back to the horizon question, and see what is happening around us and where is the world ending towards. After the war in Ukraine, Europe also went in the short term went towards coal, because of the gas shortage, but it's the one last pickup, because they need time or bridging as they are investing big time on renewables, because ultimately they want their energy mix to go towards renewable much faster than pre-war. So that's the direction of travel. The question would be, for Pakistan, whether they want to get aligned with it or they will be forced to it. I mean, whether you do it preemptively or you'll be forced to do it.
So, coming to current situation of Pakistan, we looked at energy, we looked at the world, how it's moving, and how the interest rate regime is folding out outside Pakistan. But Pakistan's question right now is about the survival. Reforms and the future is too far away right now. What we are talking about right now in Pakistan about IMF program. Yes, even if IMF program, then debt restructuring or default. My question is that while you are looking at the possibilities, you already said that through inflation and through super tax, in a way we are in default. But are we going to be in technical default? And how would post technical default, how would international investors look at Pakistan?
Sure. So, Ruxana, on that one, so let me be very clear. International investors have been looking at it for some time now. And you can see that in your numbers. Only 8% of your external debt is held by international private investors. In a typical EM, it's around 30 to 50. They don't care right now because they don't have any exposure. Not that it's a problem. It's they have no exposure or very little exposure. Now, the question would be to your very important question: the short term, is it technical or not? Is a shrug of the shoulder because I have no exposure, so why should I care? Now, what happens and how this plays out? Now, there are multiple templates. There's Argentina template where IMF went in very strong with conditionality. It often leads to political wipeout. In the sense, the current government, which puts those conditionality, doesn't survive because it creates obviously pain. That's one pathway. The other pathway is that what do you mean by default? In the sense like reprofiling, like Greece did, was that a default? Potentially no, because if it's official sector and they reprofile, you don't get that immediate liquidity squeeze, but you go back from survivability to reforms. Reforms are going to happen, whether we like it or not. But this time around, it will be driven by somebody else, not by the private sector, not by the government, because you lose control on the agenda, right? Now the question on local government, whether there can be a technical default, it's very unheard of for governments to default on their local currency because you can always print it and give it back, and there are very big cons of doing it when you are ultimately gonna default through inflation. So there are not a lot of precedences on doing a local currency default because, as I mentioned, super tax is one way of doing it, and then yes, but I don't see why even official foreign institutions will ask for it, because it will only make the situation worse. So the one thing I guess we have to focus on is the external reprofiling. If we go towards that, and our official, what is then the interaction between the official sector and the bilaterals? And within the bilaterals, there are different groups, and that's why I mentioned geopolitics. And unfortunately, I don't have any special view on geopolitics, but it is less economics and it's more geopolitics when we go into that world. And we'll have to think about, okay, if the reprofiling is done, fiscal burden is fiscal capacity is created, do they trust you to use that fiscal capacity, right? So I won't. What I will be concerned about is not about what the foreign investors will do. They are not even in Pakistan, and I don't think in the near term they are going to come back. And we saw that with Argentina. Argentina had a mess 4 years ago. 5 years down the line, nobody has touched Argentina, at least not I see. It takes 10 years or plus for foreign investors to come back and then have that risk premia, and then all those kind of things takes time. for that confidence to come back. Confidence has been shattered because of what has been happening for some time now. So, so the question would be, if there's reprofiling, what it does, and if it creates any food or oil shortage. That's what would be painful. And that can create political implications, that can create further economic implications. And we have seen countries go through that. Sri Lanka was a case of that. And we have seen that happen where reserves are very, very low. We saw that in the Asian crisis countries. It created massive food shortages, oil shortages. It wiped out the current governments which were in place. In some cases, completely changed the governance structures of those countries. But that was painful experiences. But they emerged stronger out of it, to your point. It's not about they survived, not only survived, they thrived after that. Because then they understood economics. There's no way to unlearn economics, then go through it properly.
My next question would be about IMF program. Not that it's going to happen or not. I'm not talking about that. It's more question about Egypt recently got some leniency, some waivers from IMF, and they got a huge funding. Can Pakistan receive similar treatment from IMF, or what would be required from Pakistan to do? What kind of help Pakistan should seek from outside our borders to get that program?
So this is the geopolitical angle I mentioned. So I have no specific view on it. Pakistan's geopolitical situation is very different now compared to the last IMF program. Egypt's geopolitical situation or their perceived importance to the global security architecture is different. And that matters. And the question would be if that factor comes in. Unfortunately, right now we don't have that factor going in our direction. It's not about apples to apples comparison. This is not, about equity and fairness. It's about your utility. So, and that's different now.
I think we can take some questions from the audience right now.
So thank you very much for a very insightful talk. I have one question, again related to restructuring and the geopolitics. So Roxana already asked about Egypt as an example, and certainly the geopolitics are different. I'm trying to kind of create a relationship between the situation of Pakistan and Sri Lanka, where the Sri Lanka certainly does not have any geopolitical importance as such. Similar situation, a lot of debt from China, and so is the case for Pakistan. We have a lot of debt from China. In terms of the performance of the markets and the performance of the currency, after the default, we have seen a surprise run up in the currency as well, and also in the performance of the markets. So can you help us understand what is driving that buoyancy or positivity about that market? Thank you.
It's very simple. I mean, you owe somebody $100, and then now you're saying I'm not going to pay you. You owe $100 less, right? So, so it's basically defaults create fiscal capacity. Your balance sheet gets wiped out, and you start afresh. And which is positive for the country, negative for your creditors. Now the problem happens is that when you default, and if the market is involved and the private sector is involved, then they ask for a premium, right? So your financing costs go up. That's how the mechanism, transmission channel works. In Pakistan's case, as I mentioned, I think it's only 8%, which is private sector debt. So it's not huge. And there's no any scope for going to the market anytime in the foreseeable future. So that mechanism is not that powerful. So the buoyancy comes through because of the cleaning of the balance sheet. And then usually going into the default, currencies overshoot through depreciation. So that's the correction of that overshoot. So you have permanent depreciation, but rather than depreciating 70%, you depreciate 95 first, and then you pull back. That's a very normal behavior. Going into the crisis, negativity becomes extreme, and then undervaluations start to come into play. So it's correction of that undervaluation. And it's also a gimmick of the arithmetic. Just to give you a sense, like you go from 100 to 20, and then from 20 to 40, it's 100% gain, but you're still down 60%. So it's basically a mathematical arithmetic illusion, but you have lost, more or less.
Salman
Please.
Spas of Qureshi here. Thank you very much again for that talk. I've got two quick questions.
Of course.
You mentioned about being part of the team which worked on BRICS under Jim O'Neill, and you can coin the term Next 11 as well. So just want to have your thoughts on when you look back and evaluate those economies vis-a-vis the projections that you made 15, 20 years ago. How have been the divergences? What have been the overperformances and underperformances, and what were the reasons? Second quick question, when you make a comparison between Pakistan, Bangladesh and India, how do you compare the performance of the private sector across these three economies? We know about the role of the public sector. Thank you very much.
Both very important questions. So let me start with BRICS. So BRICS as a group didn't have a fine record. So Jim has moved away from BRICS. I spoke to him recently. He doesn't talk about BRICS anymore. So we were right on China. And because remember, BRICS reports started coming in 2003. So I worked on the second, third, fourth one. So I joined Goldman's in 2004. So the first projections of which we improved came through. So if you look at China's rise, we got it. That China is going to become a proper economic power. We got India's rise as well, properly. Where we went wrong was Brazil and Russia, for different reasons. Obviously, sitting in 2004, we didn't see Russia invading in Ukraine, but even their projections we did, they underperformed. So Brazil and Russia underperformed versus projections. Within Next 11, Pakistan is one of the major underperformers versus the projections. So our projection was 6% growth average over this period. So we underperformed massively, and because of that compounding and comes constant survival issue. Being in a survival mode all the time is also a problem, right? Because there's no strategy to think about what I'm going to do after I get through survival, right? So that Pakistan is underperformer. You can correlate it and connect it with what we called growth environment scores, which brings me to your second question. What is the difference between Pakistan's growth environment scores, or the causes, if you will, of having underperformed your projections and underperformed your neighboring countries? One is tax to GDP ratio is one of the critical one. So every dollar rupee Pakistan pays tax, India raises 2 rupees. I think Bangladesh is 1.7, 1.8. I don't exactly remember. It's a big difference. So when people say to me, in Pakistan I speak to a lot of relatives of mine who are in the business sector. No, we are all taxed and blah, blah, blah. You're not. When you look at the macro level, Pakistan, compared to emerging markets, doesn't pay taxes. And as an economist, and as an EM country, focused on EM country, we should remember that the forces of economics are very powerful in EM. They are far more powerful in EM than they are in DM. Because in developed markets, they have the advantage of reserve currencies. And EMs do not have that advantage of being a reserve currency. That means pure economics matters. If you're not paying taxes right now, you will pay taxes later on, which is exactly happening to Pakistan. So when you are creating that shortfall of 10 percentage point versus GDP for 10 years, you create those imbalances which then have to be reconciled. And that happens by defaulting. So now the state will default on you as a private sector because you didn't pay your taxes. it will keep defaulting on every imbalance it sees, if you see my point. Because the official sector then comes in and says, this shortfall has been created over 10 years, you have to fulfill that shortfall within months, right? And that's the survivability question Oksana was asking. So that's one factor. One of the key reasons why Bangladesh and India doesn't get into trouble is that they pay more taxes. And when I say you, it's a collective you from a Pakistan perspective. Second is our imbalance on current accounts. So after 1997 and then India in 1993, they realized the importance of reserves. So India's reserves are around 700 billion. Equivalent Pakistan should be 50-60. You know our numbers. So we have never prioritized that economic buffer building and structuring of policies which will and a compact across institutions, across political aisles and state aisles, that this is non-negotiable, which India did, that we have to build that buffer. So that explains all of that. And then to your question on private sector, the banking sector's role is different. Their credit to GDP is higher. They participate in the economy much more strongly. They are pro-cyclical with the economy. So let me put it this way. In a typical economy, when the economy is doing badly, the banks do badly. In Pakistan, there's divergence. And that is a symptom of a problem, underlying problem, because the banking sector does not play its role in creating those capital flows. Now, I'm not saying blaming the banking sector. I do want to go home in one piece. It's potentially driven by the surrounding environment, the institutional infrastructure, the legal protections. All those things matter, right? In terms of how you can safely give credit. But you look at the numbers, their private credit to GDP ratios are higher. Their banking sectors are more pro-cyclical. And if you look at the external imbalances, they have prioritized those economic buffers. Lastly, I think that goes more for Bangladesh, where manufacturing as a share of GDP has just shot up from single digits to 25%. So that has come through not by chance. There's proper strategy behind it. And if you look at India, their share of exports and services exports have been rising. IT export, obviously, a big example, and that links up with political and security situation. I'll give you my own example. Fidelity International has 10,000 people in India. My own team has 15 people working in India. And it's very difficult to convince foreign capital to open subsidiaries if you can't visit the country. It's as simple as that. Thank you.
Oh, yeah. Yeah. I just wanted to ask you one question. Is that Pakistan has been going through its boom and bust cycles for since its inception of Pakistan, but the thing different this time is that the gloom and doom scenario is unmatched. It's unprecedented because all the economic analysts are prophets of the doomsday, and what we really lack or what we really suffer is the lack of hope. There isn't any silver lining in the sky. One thing I gather from your talk is all the Asian countries have gone through these tough times and they've emerged stronger. So is it a paradox that Pakistan would have to go through the darkest of the night to see the silver lining again? Because one thing which we are suffering is the lack of hope. A lot of we are seeing unprecedented brain drain. The people who should stay in Pakistan are leaving, and that is the human resource of which is needed for the rebuild is not there anymore. So, is there anything you can give hope to our next generation for them to stay in Pakistan? Any silver lining? Anything which could convince them to stay back, because otherwise it's a gloom and doom. We are bombarded with negative news. I mean, if you, this is an information age where we are overdose of information that is creating a lot of gloom and doom, and which is affecting the ability to think rationally. So, do you can you give some hope to Pakistan's economy?
No, so I see your point. So the question is, what to do with this gloom and doom? If it forces you to take action and do reflection and create a strategy, then it's a cause for hope. But it forces you that everybody is an idiot and we will come out of it because we have come out of it for the last 21 times. That's when we are setting ourselves for the 22nd time, because that's exactly what we have done last 21 times. 23rd one. Okay, so I've even lost my count now. So we are setting ourselves for the 24th time. We are hoping for the 24th time. अगर आप 1950, I think 1950s में पहला IMF program था, maybe I'm correct on that one. आप उसकी front page अगर पढ़ें ना, और अभी latest program की वो same है, exactly. So I think we need to ask ourselves this question कि ये doom and gloom जो हम करते हैं इसका result क्या है? What does it forces us to do? Because bailouts have not helped us, because we set ourselves for the next cycle, which you referred very rightly as boom and bust cycles. Now, आपने वो भी example दी Asian crisis की. Asian crisis की जो pain हुई थी, हम लोग 5% भी अभी नहीं हुई. अभी तो you're not even close to that. 97% currency depreciations. 7 say 8% GDP contractions. You should put those numbers out to see. Pakistan is a very interesting country, जहाँ पर frequency of GDP contractions बहुत low हैं compared to the fact in terms of how many times we go to the IMF. As a pure economist, and I'm speaking as a pure economist, it creates a moral hazard problem, because to get a bailout before you get a GDP contraction doesn't teach you that lesson, that this is painful. So Asian countries की जो ये contractions थी 5, 6%, 7% GDP contractions, they are painful. And now with that pain, and this is not doom and gloom. Doom and gloom एक perception है, pain is actual pain. Without pain, reset कर सकते हैं. That requires vision, that requires openness, reflection, and preemptiveness. And I don't know what you are better. You're on the ground, so you have a better gauge of what's actually happening and if there is any forward-looking thinking coming through. But as I mentioned, 97 ka, this is nothing. अभी तो भी start है. If you're thinking about 97 में तो आपको if अगर वो same template or 2 years of 5-6% contraction, then you have to ask the question: can Pakistan actually socially and politically survive it? Right. So those countries survived it. They thrived on it after that because they learned their lessons, and they know how to. They know economics. The quality of the debate is much different. They are far more sophisticated because of that experience, and coming through that. I don't see that scenario, at least as my base case for Pakistan. But because Pakistan's peculiarities are different, they were massively external debt exposed and private sector debt mostly. जो private sector होता है, it can punish very badly and very quickly, and we know that. And that's why, why the original thinking was liberalize करें, financial sector को open करें, private sector को लेके आएं. Not just कि वो innovation करते हैं और jobs create करते हैं, but they are also punishers. You do things wrong, they will punish you multiple times. Through massive risk premium increases, by increasing your cost of funding, by making you pay for everything as a country, as a borrower, if you will. So I think we have to cut through that and think about कि ये जो अगर program aa jata hai, what is the strategy next? And if it is not, then this is only gonna get worse going forward, and ultimately we will head towards a 97 position situation.
So I've got this question. I am
Be the
Sayed
last question.
Yeah,
Yeah.
last one.
Thank you.
So I am Sayed Babrali, and this is a common person question, and you have missed it actually. So what is the role of corruption of A, B, and C in putting Pakistan in such dire states?
So let me just answer that question through academic research. जो हमने growth environment scores produce किए थे for different countries, and as was sharing, they can explain some of the differences. If you want to say कि भी वो tax to GDP ratio पाकिस्तान का 10 है और इंडिया का 20 है, ये corruption से है, I won't disagree with that. Numbers are numbers. आप tax नहीं देंगे because of multiple reasons. I don't want to question the mechanisms of it. The thing will accumulate, and this is where you end up with. But we have to ask ourselves, what are those countries doing differently, and also understand कि corruption, the way it is defined, happens everywhere. Kind of corruption scandals आप इंडिया के देखें, तो पाकिस्तान तो in terms of sizes, you can't even match that. और ब्राज़ील का corruption हुआ था Petrobras का car wash scandal, connected to the government and judiciary, blah blah blah. Those are big scandals, but it is not the only factor. It's good for rhetoric, and it's good for mass mobilization, but the story is not as simple. That's the only point I would raise. It's an outcome. It's not the cause.
So we have one last question,
Please.
and then after that we can continue talking to Dr. Salman on the dinner.
The same 3-4 years, both these corporations invested couple of billions dollars in India in renewable, like Greenco, Renew, and all these other companies. So now that I've moved to Pakistan, I understand why the answer was always red. But as an economist, and if we get rid of all the government intervention, IMF and all these people coming and saving, if we just purely focus on the market factors, how long do you think the pain needs to be sustained or will be sustained before we can emerge as an independent economy where we can solve our issues ourselves? Is it going to be 5 years, 10 years? Is it going to be in our lifetime? Or
Look, I think it's you're asking a valid question, but I think the way to answer that would be, it depends on us whether we want to do it in 5, 10, 15. Because there's no magic solution to any problem. You can look at the environment and say what are the factors you can see and deploy to change economic outcomes. But let me give you some historical examples, and less relevant for Pakistan, but I think they're relevant from a longer term perspective. So Europe was completely decimated after World War II, right, because of the issues which happened, and the Western powers, current Western powers, just won in a delta sense. What happened after that? So Europe rebuilt itself. We have to ask how did that happen, because the entire infrastructure was wiped out. So compared, agar you want to आपने पूछा था doom gloom का, at least we are not in World War II जहाँ पर हमारी सारी infrastructure wipe out हो गया. So that's probably, if we want to feel positive about the whole situation. Exactly. You're 2 notches above World War II. So pura decimation of capital infrastructure, loss of labor, and prime. I'm just articulating it from a pure economist perspective. So please don't think कि ये बंदा human ही नहीं है, but I'm just just articulating from a pure economic perspective. आपकी prime labor force collapse हुई. You had capital decimation. How did Europe rebuild itself? The most important component was the Marshall Plan. Marshall Plan में US ने यूरोप को 17% of GDP, 17% of GDP aid दी थी. Aid, loan नहीं, aid. And against that aid, capital restructuring and capital rebuild happened, and trade deals, and ultimately the fact that we are going to build a rule-based, common value-based system. So the whole economic transformation after that, जिसमें ये institutions भी बने, IMF बनी, Bretton Woods system आया, and then of course how it started creating first the seeds of Cold War and then ultimately turning into the cycle after the fall of Berlin Wall. And then the last third phase we are seeing now was driven by massive capital transfer. Not because Europe ने तो गलती कर दी थी war start करके World War II, and they paid a heavy price, even though they won, but at what price? So it was a massive capital transfer which happened, and that rebooted the system, if you will. अब जब ये यूक्रेन रशिया की वॉर स्टार्ट हुई है, यूरोप में अगर आप नैरेटिव देखें तो वो वर्ल्ड वॉर 2 से दोबारा कनेक्ट कर रहे हैं. यूएस इज कमिंग थ्रू कि भाई के हमारा क्या इंगेजमेंट है एंड व्हाट आर वी थिंकिंग फ्रॉम अ लॉन्ग टर्म पर्सपेक्टिव. दे डोंट थिंक इन 6 months, 1 year. They think in decades. Pakistan is probably one of the only countries I find where the short termism is huge. So वो think कर रहे हैं कि भाई कि हमने इसको नेक्स्ट वर्ल्ड ऑर्डर क्या है हमारा, राइट? और उसमें फिर चाइना है, ताइवान है, इश्यूज हैं. सो द एग्जांपल आई एम गिविंग इज बिकॉज these big geo world order changes can change economic outcomes massively, and we have seen it happen. And we have seen it happen in much bigger sense than is commonly understood. जब 97 का जो मैं आपको एग्जांपल दे रहा हूँ एशियन क्राइसिस की, जब इनकी कंट्रैक्शंस हुई, जब IMF आई, तो वन ऑफ द अंडरलाइंग जियोपॉलिटिकल वाज द अलाइनमेंट ऑफ वैल्यूज, जो इंडो पैसिफिक मैप जो बना. सो पाकिस्तान बिकॉज ऑफ इट्स जियो स्ट्रेटेजिक नेचर एंड पोजिशन cannot survive without a long-term strategy. Otherwise, we will always be in the survivability because we are underestimating our importance for good or bad reasons of that geostrategic position. It's an excellent book. It's by Tim Marshall. It's called Prisoners of Geography. There's an excellent chapter on India, Pakistan. You should read. Its chapter on Russia, Ukraine is spot on the analysis. And his point is that geography drives economics. And I think we are back in that world where geography will define economics because of climate change and other things as well. So to your point, when we get out 5-10 years, is the question of how do we use these factors and the changing of the world order. There's a positive outcome, which if you align yourself with the right power and you get that capital transfer and trade deals, you can come out of it stronger. Or you make that bad bet and then you're still getting into that vicious cycle. But you don't have to be what Europe has shown after World War II. You don't have to be a commodity exporter to achieve high income status. Japan has shown the same thing. Asian countries have none of them export commodities. So you can do that. It's a question of how to match economics with geopolitics and create that geo-economic link. But that by definition needs long-term horizon. That's the problem. Sorry, a long-winded answer to.
No, that's fair. And what my takeaway is, I don't think maybe we need the politicians to be wiped out, more sensible people to come in who will have a strategy, hopefully, or will think long term.
Yeah,
So that people may come on
It's interesting you say that, actually, sensible people to come in. I think we underestimate what sensibility means, in the sense that after a shock like 97, anybody who's going to come in will be sensible. Yes, it's essential.
Um, Thank you, Dr. Salman, for this insightful discussion. Thank you for sharing your valuable time with us. And I would like to request the Board of Directors of CFA Society Pakistan to please come up on stage, and our Executive Director to give the token of appreciation and plate to Dr. Salman.